Hello and welcome to the business news brought to you by Blytheway. I'm Charlie Gibson. Now, as I always say, sometimes when we speak to our companies, the clue as to what they do is in the name. Sometimes, however, it's not. So if I tell you that my next guest is Blackstone Minerals, don't expect the rocks to be particularly black. There will be rocks though, there will be stones, but they're not black. And in this particular instance, fresh off the plane from Australia and therefore horribly jet lagged, is the company's MD, Scott Williamson. Scott, very good, I would say, good afternoon, good morning. It doesn't really matter, does it? Because whatever I think it is, you think it's 12 hours different. So,
something like that, yeah.
But well done. Thank you very much indeed for joining us. So tell us about Blackstone.
Yeah, thanks, Charlie. Thanks for having us. So we recently acquired the Ta Khoa Nickel Project in northern Vietnam. This is a previous operating mine. It's now under care and maintenance. Our focus is to bring this mine back into production, but we're going to do it a little bit differently to the previous owners. So the previous owners focused on massive sulfide veins, and we think that there's a potential for a larger play with the disseminated ore body. But most importantly, we think we can move this towards what could be a battery product or a downstream nickel sulfate product for the lithium-ion industry. So previous owners were focused on stainless steel and nickel concentrate, and we now think we can move this back into production, but more of a focus on the battery metals.
So humour me, was the, for those of us who have a particular view of Vietnam, it's an unusual place to operate in, was the previous owner the Vietnamese government?
No, it was actually a TSX listed company called Asian Mineral Resources, and the major shareholder was Parla, and they operated this mine very well, and full credit to the team. It was a mainly Australian team that built this mine, and they built it to an Australian standard. So they've sunk over $130 million of capital into the infrastructure, and they've given us a great head start into what will be a long life mine. So it wasn't the government, but there is a lot of the mines in Vietnam are owned and operated by the government, and this is one of the mines that has been always in the Westerners' hands, and it's been built to what is a world-class or Australian standard.
So again, for those of us who think of Vietnam, we think of Apocalypse Now, we think of the Deer Hunter. What's it actually like to operate in country? Yeah,
it's actually very refreshing coming from Canada and Australia, where things can be a little bit more bureaucratic, green tape, red tape.
Australia and Canada are more bureaucratic than Vietnam, is that what you're saying?
Yeah, well, what we're seeing is that we can actually get on the ground and get things done. So we've got 4 drill rigs spinning. The ability to actually get on with it has been amazing. So there's a culture there where they are just so appreciative of the opportunity to build a mine, and the government's been very supportive. So yeah, it is actually been very refreshing, and the operating cost environment is, so we've got 4 drill rigs spinning for the cost of one in Australia. So $80 a metre versus $500 a metre in Canada, dropping drill rigs with helicopters and all that sort of carry on. So it's very refreshing in such a difficult capital market to be able to actually get something done and get it done very cost effectively.
And what language do you communicate in?
We can do whatever. It's mainly just Australian bush language.
Right. I mean, it's not English, not French. Or do you have schools of interpreters? Or do you just get by?
Well, the Vietnamese are very strong in English, so we don't really need any interpreters. So it's this is a country that's been invaded more times than anyone. So they can speak almost any language, from Russian to French to English. So yeah, it comes back to the can-do attitude. They just get on with it, and they'll speak whatever language they need to.
Good geologists, well educated? Very
well educated. So we've got our chief geologist has been on this asset for 20 years. So Mr. Ming, he's been waiting for this opportunity to shine, and he's going to find a major discovery, and we're pretty confident of that. So he's never been really given that opportunity to actually drill something. They went to the first ore body, drilled it out and mined it. There's 25 targets undrilled. So yeah, very skilled labour force. These are geologists as good as anything we'll find in Australia or Canada, but even better because they've been with this asset, they've been incubating this asset and getting it ready for this opportunity.
Spare parts easy to come by?
Yeah, well, we're right next to China, so we went and bought a drill rig the other day for $15,000. So that just shows that drill rig drills down to 300 metres. So this is some of the lowest operating costs you'll see in any jurisdiction.
So geographically, you're reasonably close to Hanoi. I mean, by which I mean really you're in the north of the country, not in the south of the country. But geologically, it's quite interesting as well. There's a big sort of plate junction going on there. So just tell us a bit about the geology and why you're looking for what you're looking for.
Yeah, so we're 6 hours out of Hanoi, and there's a major rift zone that goes into China. So that as soon as you get to the Chinese border, there's nickel mines all through China. We think that that's the exact same structure we know that's the same structure that goes through Vietnam, but it's never been systematically explored. So we've got this major rift zone, deep-seated geology, the same, I suppose, structural setting as Jinchuan, but also the age setting as the Norilsk mine in Russia. So this is a magmatic nickel sulfide system. These are the sort of systems that deliver major magmatic nickel sulfide ore bodies. So yeah, very exciting geology.
So obvious question, why was it then that the old owners closed it down?
Yeah, I suppose there was a difficult nickel price environment, and being not really geologically focused, they were very much focused on mining, creating cash flow, and as with a lot of these scenarios where the money becomes tight, exploration is the first thing that goes. So we've come in there, exploration is our highest priority, and we're going to unlock this geology. So yeah, I think it was a lack of focus on exploration, but also a very difficult nickel price environment, and this was well before the battery nickel market really took off. So it's completely different time in the market, but also a different focus.
I think you said that they put $130 million into it, US, Canadian, Australian?
Yeah, US 136 million. Okay. So that's a concentrator. The concentrator's ready to go. A great underground mechanised mine, so they've used jumbos and large trucks, and so these are pieces of infrastructure that we can leverage off. So that's 130 million I don't need to find as a I suppose next step. We can now look at the downstream process and then deliver the nickel sulfate, which is the next sort of circa $100 million or whatever it ends up being.
You own 100% of it.
Yeah, so it's an option to own 90%. There's a local partner who owns 10%. That local partner's been with the asset for nearly 20 years. So that partner is a very key part of our relationships with government, the local people. So we'll keep that partnership in play. So we'll end up with 90% of the mine and a local partner with 10%. So and then we'll move to the downstream process, and we're happy to bring in partners at the downstream level, but we'll keep 90% of the mine at this stage.
And what consideration did you pay for the mine when you bought it?
So we've got an option to own them on the 90%. If we to exercise the option is $1 million worth of Blackstone shares. So we'll do that over the next sort of 12 to 18 months, and we'll move that forward. So clearly we're focused on this asset, and we will exercise the option. It'll be $1 million worth of Blackstone shares.
Market cap of Blackstone at the moment is what?
It's circa 20 million.
So you bought 130 million US dollars worth of kit, and you're worth 20 million Aussie.
And that's not including the in-ground value of the nickel they left behind. So yeah, it is a compelling valuation metric, but we do need to show the market what's left behind. So very aggressively we'll drill this out. We'll show maiden resource, scoping studies, MPVs over the next 6 months. So it will take time for the market to really understand what we've just achieved, but yeah, I think it's worth a lot more than the current market cap.
I want to get on to the fact that it's nickel sulfide in a minute, but you said you were looking for a disseminated ore body rather than a narrow vein, a high-grade narrow vein. Will you be using the infrastructure you've acquired? Can you use that underground mine, or are you just going to do a massive open pit?
Yeah, it could go either way. At first, being an underground mining engineer, my first thought was, okay, let's go out and grab the high-grade disseminated. So some of this disseminated is running 1 to 2% nickel, and it's bulk, large, broad nickel sulfide. It could end up being a big open pit as well. So open pit, you can drop those cut-off grades right down. The concentrator is set up for a small, massive sulfide scenario, so we'd need to add some more milling and some further float cells and a bit more crushing capacity. So yeah, we will have to upgrade the concentrator at some stage to process the lower grade material. But yeah, which way it goes, I'm an underground guy. I'm happy to go underground, but yeah, we'll have to see what the drilling delivers.
I'm assuming that there is a historic resource there already.
Yeah, so there's a non-JORC resource. Yeah,
Why is it, out of curiosity, why is it non-JORC if it was always in Western hands?
Yeah, so it was a resource that they worked on, but they were never sort of at that point where they needed to announce it. We're not sort of announcing anything yet, but what we're seeing is the numbers are probably coming in better than we thought. But yeah, there's going to be a significant amount of nickel to be in this maiden resource over the coming sort of 3 to 6 months. So.
I always ask this, but where would you be, and I'll allow you to apply your wildest dreams here, but let's say 2-3 years' time, what will the operation look like?
Yeah, so 2 to 3 years' time, we're building a mine and we're moving it into production. So we could turn this on tomorrow, but that would have to be a nickel concentrate, and there's a 20% tariff on concentrates. The previous owners paid that tariff, and they paid the government $65 million. Our plan is to move to the downstream process and a downstream product. That will take about 2 to 3 years. That allows us to remove the tariff, but also increase payabilities. So payabilities on a concentrate are a lot less than what we can get for a nickel sulfate. So we'll remove the tariff, increase payabilities, move this forward in production over 2 to 3 years. Yeah.
So just explain that nickel sulfate, and in particular why it's different from, because sometimes we hear about laterite deposits, but just explain the differences between those two things and why it's important with specific reference to batteries.
Yeah, so the sulfate is the key ingredient into the battery chemistry. Nickel sulfate is a lot easier to create or deliver from a nickel sulfide ore body. So for a nickel laterite to move all the way through to sulfate is much more difficult, a lot higher capex. We're sort of talking billions of dollars and HPAL and all that sort of process. So a sulfide into a sulfate, we can do that much more cost effectively, lower capex. And so we can move this concentrate through to a sulfate much easier than a nickel laterite. So, and the key ingredient for the battery chemistry means that at the moment there's a very small nickel sulfate market, but a lot of demand coming. So this is a new sort of industry. This is the first time as a nickel miner that we can actually move this towards a nickel sulfate as a junior miner. Previously we'd have to deal with refiners and larger players, but at the moment we think we can move this all the way through ourselves.
Presumably you'll need sulfuric acid.
Yeah, there's
there
is some acid. Yeah, so not a large amount of acid. So the sulfide creates its own exothermic reaction, and the sulfides in the ore body actually create their own energy. So you don't have to add anywhere near as much acid as, say, a high pressured acid leach. So yeah, they're all chemicals and reagents that we can get in country.
They're all freely available, and then presumably you export out to a battery manufacturer in China.
China, Japan, Korea are the major players in the battery market. LG are looking to build a battery plant in Haiphong at the port city down the road from the mine. So it might not even have to be shipped offshore. There's a good chance that the nickel goes into a battery in country and built into an electric vehicle in Vietnam. So that's the end goal, but we're happy to ship it offshore as well. And because it's a final product or an intermediate product, we can remove that tariff.
If it does go in country, does it go on what we would understand as commercial terms, or is the government going to try and control the price?
It'll always be I suppose, an agreement with the end user. So the government can't come into that agreement. These end users, let's say the Korean parties, they've been in Vietnam for the last 20 years. So they're a really key part of the economy. So are the Japanese. So I don't think the government are going to be any part of that negotiation or agreement, no.
Do you think, looking at the nickel market in general, does it bifurcate, does it split in the future? We do have a lot of production coming from the likes of HPAL and laterite leach type operations, and that creates what they call class 2 nickel, doesn't it? And that typically goes into ferronickel. And then you've got the sulfides, of which there's seemingly a dwindling supply, and they go to make class 1 nickel, and that's, if you like, the high quality end of nickel, and that's the sort of thing that goes into batteries. Does the nickel market split, do you think, into class 1 and class 2 nickel? I
think there'll definitely be this split between nickel that I suppose that can become nickel sulfate, and that's generally the class 1 nickel, and the nickel that can't become nickel sulfate. So that's the more intermediate products, or the ferro nickel or nickel pig iron. So yeah, there's definitely, so LME nickel, the reason why the LME stockpiles are falling is because of stainless steel at the moment, but that's the sort of nickel that eventually will be required in batteries. So anything that's class 1 or LME grade needs to go into batteries or nickel sulfate. And so there will be this sort of, I suppose, benefit of having nickel sulfide because that's so much easier to deliver into that nickel sulfate market. Yeah.
And then I always ask this, but you said where you want to be in 2 and 3 years' time, construction and going into production. Do you have enough cash to get you there?
No way.
Right.
Nah, so we've just raised $4.5 million. That gets us all the way through to a scoping study, maiden resource. To build this mine back up, it's circa $50 to $100 million.
But you're going to do a pre-feasibility and a bankable,
Yeah,
or you might
bankable
skip the
studies.
pre
There's plenty of work.
Yeah,
A lot of work to be done before we are ready to go to market on that. But we believe that we can bring in an end user to help fund that. So that allows us to lower or less dilution at the corporate level and dilute at the asset level, at the downstream processing level. So our focus is bring in a partner that can help us fund that, and we do a joint venture arrangement where we dilute at that downstream level and keep the dilution at the corporate level as minimal as possible.
All right, Scott, we wish you the very best of luck. Thank you very much indeed for joining us.
Thanks for having me, Charlie.
Pleasure, ladies and gentlemen. That was Scott Williamson, the Managing Director of Blackstone Minerals. I'm afraid that's all we've got time for today. We'll be back soon with more such investment opportunities, however, in the very near future, we hope. And until then, you have a very capital day.